Okay.
All right.
All right. Welcome, everybody, to the show today. Today, we are going to be talking about how to save money on insurance. And how to save money on insurance is probably exactly the same thing as saying how to take more risk, because that's exactly what you're doing, right?
Yeah.
It's a trade-off. When you spend money on insurance, you're transferring the risks to someone else.
Mhm.
So, Carly, you are who? What do you do? Because I think that's probably important for this conversation.
Well, you employ me.
That's true. So I better know what you do. But
So,
for the sake of those that are listening, what do you do?
yes. No, I'm an insurance advisor. So financial advisor specializing in insurance for people, not things. So I look after things like life insurance, health insurance, income protection, things that are protecting, I guess, your biggest asset, which is your ability to earn, your ability to get up every morning and go to work.
Yeah. Before you switch off, because this is like, as soon as you say that, it's like, oh, the old insurance thing again. This is a financial product.
Absolutely.
It's a hedging tool, which allows you to take risk, which is what you need to do to build wealth. So this is part of wealth building, right?
Yes. I've heard you describe it as renting access to a rich family. Love it.
There you go.
Yeah.
That's exactly it.
Rent an inheritance.
Rent the inheritance. And so this year, have you had a few questions, or have you had a few grumblings, if you like, around premiums going up so much?
Yeah, I think people are now looking at their spending, and they're looking at their budget, and they're seeing this bill every month and going, what is this for, and why is it so high potentially? And with insurance, it's the ultimate grudge purchase. It's something that you're buying hoping that you're never going to have to use, things like life insurance. Yeah, we're getting lots and lots of requests. Just tell me what I've got again, and if that is all still applicable, things might be getting a bit tough in terms of cash flow. Is there anything that I can do about it to help it fit my budget a bit better? So,
Do you think people understand why the premiums go up?
Some people do. I mean, they go up mostly for three reasons. One, you're a year older. Second one is sometimes the amount that you're insured for is increasing, and that can happen in line with inflation. And now that we're actually getting some it's around 7.2% the increase we're seeing at the minute, it's starting to become a lot more noticeable. People are getting a bit older. All of those they come in a perfect storm and increase your payments.
Yeah. Claims, I'm guessing, and I've seen some stuff from various different sources that would suggest claims have been significantly higher. And certainly like the premiums that I've seen come in, especially over the last 12 months, have been quite a bit higher than what I've seen previously. Are we in a bit of an anomaly sort of zone right now from what you've seen with the increases that are coming through?
That feels a bit higher than it has been in the past. And people have had delayed medical interventions. So, they're being diagnosed with conditions that they may have been picked up earlier had the health system not been under so much pressure or lockdown. That could be part of it. Another part of it could be that they experience some deaths or some disabilities or disablements through COVID. Could just be that they're going through a period of rationalizing costs or looking at their claims and making new assumptions going forward. So it does seem like the past year or so has been a bit of a price adjustment. And we're hoping that it's not going to be as aggressive going forward.
And I think they probably have to think about what the premiums are that they're charging, because if it gets too much, then, like you say, people will just call up and cancel it or move to another provider because it looks like it's a cheaper plan. But what's the risk, I guess, with moving to another provider to lower your premium?
There's a couple of things. Usually with insurance, if you're paying less, you're missing out on something, and it might not be something that matters hugely to you, so it might be okay. But it's not like car insurance, not like house insurance. It's not a good idea to shop around when it comes to personal insurance. And the reason being is that anytime you reapply with a new insurer, you've got to go through full disclosure of your health. So you might end up going from a policy that covered you for everything, moving to a new provider, and they're going to exclude stuff like that polyp you had removed from your bowel 10 years ago, so you're not going to be covered for cancers in your bowel. They may decide that they're going to charge you more because you bring more risk to the insurance pool now that you're a bit older. Definitely get advice around it, because we can tell you whether you'll get a good deal.
You can't really go back in time. I wish you could. I wish you go back in time and just say, hey, you don't need to get this insurance because you're going to die when you're 85 years old.
Yeah.
But that would be awesome, right? But then you'd really freak people out.
Absolutely.
So maybe it's good
Sign
that you
today.
don't know.
Sign today.
Time machine, we can go and see in the future.
Yeah.
So what are some of the other things that we can do? Let's say,
Yeah.
so someone calls you up.
Mm-hmm.
Hey, I'm not happy with this insurance premium. It feels like it's just getting more and more expensive, and we're going through a real tough time right now because of some renovations that have gone over budget or whatever the story is. What can people do for some short-term relief?
Yeah. So insurance companies do offer a couple of options that you can look at. There's one which is called like a premium holiday. There's very strict criteria, but one of them is maternity leave, for example. They'll give you, or parental leave, they'll give you up to 6 months off your premium, so you don't have to pay your premium, but you still are covered, and that's the important piece.
Right.
You still have access, if you do need to make a claim, you've still got the same cover, you're just not paying for it for 6 months.
Right.
And obviously if you're on parental leave or whatnot, you might be down to one income. That can be a good time to exercise that. They also can give it to you if you've recently lost a partner or a spouse, recently passed away, lost a job, things like that. They do offer some help there.
So the premium is like waived or
Correct.
Just deferred?
No, just waived.
Waived.
Yeah, so they don't make you pay it back. Like there's only a few companies that will do that. So that's one option. It's the ideal solution because it is short term. The other option, which is a little bit more riskier, is what's called a suspension of policy. Now that one is you don't pay for anywhere between 3 to 12 months. You don't pay any premiums, but you actually don't have any cover during that time.
Okay.
So the real risk is that something happens to you during that suspension.
So what would be an example of something like death? Obviously is an easy one.
Yeah.
But what happens if you just get something that doesn't kill you, but it's a diagnosis of something that might be quite serious?
Yeah. So let's use an example of you're diagnosed with cancer 6 months into a 12-month long policy suspension.
Yeah.
If you have the type of policy that pays you if you're diagnosed with cancer, you won't be able to claim in that point.
Right. Because with a suspended cover, you don't actually have to pay those premiums back, do you?
No.
Again, they're waived.
Correct.
But you also don't have any cover, which means that when it recommences, depending on what happened during this suspended period, you might actually have an exclusion effectively, right?
Well, yeah, you won't be able to claim on that particular
issue that
happened.
Yeah. Okay.
The other thing is if you apply for, say, you go, right, I need help for a year, you apply for a 12-month suspension on your insurance. 3 months in, you're actually like, oh, no, things are actually better. I want to turn that back on again. You can't.
Oh, really?
So
you actually have to stay there the whole time that it was suspended for.
Yep. So the insurance company's saying, hang on, have you just been diagnosed with something, or have you just felt a lump somewhere? Why are you turning it back on early? So
I see.
That's another consideration if you are looking at something like that. I'll usually advise you to just apply for the shortest amount of time and then add it on if you need.
Okay.
If you need reapply, if you need.
That's a good point. Okay.
Yeah.
So what are some of the other things that you could?
Income protection, for example, has a lot of different levers that we can pull.
Yeah.
We can do things like extending the amount of time that you have to sort of survive on your own steam before the insurance company will step in.
Sure.
That's going to lower your premium.
That's called the wait period, yeah.
That's right, yep. Okay. And then the other side is the other end, is the benefit period, and that's how long they'll pay you for. So some policies have, if you're off work, you'll be paid right through till you turn 65. That's the most expensive option. You can dial it right down to, can you just pay me for a maximum of 2 years?
Sure. So what about medical insurance? What are a couple of, we're not going to cover everything, of course, but what are a couple of things that you could do or consider doing with your medical insurance to lower the premiums?
Yeah, well, with medical insurance, usually there's a portion that you pay before the insurance company will step in, and that's called your excess. Yeah. So the lower the excess, the more risk there is on the insurance company, so they charge you a lot more. So if you have a zero excess, you could look at bumping it up to maybe $500 excess or $1,000 excess. Now, what that means is if you do need medical treatment, you will have to pay the first $500 or first $1,000. So you're going to need to have that money somewhere. But it will bring down the price of your monthly or regular premiums.
Sure. Okay. Yeah. And let's keep on going. Trauma insurance, which is when you get paid a big chunk of money if you get diagnosed with something serious like cancer. Mm-hmm. What could someone do to lower the premiums on that type of insurance?
Yeah. So if you got your insurance like pre-2013, for example, there was probably only one type of trauma insurance available to you, and it was a lump sum. It was one severity. Here's your huge amount of money and see you later. These days, we've got what we call a Gen 2 or second generation wave of trauma insurances, and they're based on different severities. So you can pick a little product that pays out at running with cancer again, a stage 1 cancer, which is not as severe. That might be a small amount of money. It's the most expensive because it pays out at such a low severity. So you may choose to have a little bit there. The next one is pay out at a more moderate severity, and the final one might be more severe. So you can build a little portfolio or a little roller coaster of trauma cover, and because the more severe it is, the cheaper it is. You can manage your premiums that way. As you get older, you might only have the most severe type, because it's the cheapest, and in your 70s or 80s, it's likely to be more severe when you claim.
So you can shift from first generation to second generation policies, which are like with a portfolio approach that you can change every couple of years and reallocate. And I guess we could always, and this is the same with life insurance, to save money on anything really, you could just decrease the amount that you're covered for.
That's it. Yeah. And that's another reason why it's so important to review your insurances. Maybe every 1 to 2 years, is to make sure that the amount that you're insured for is still relevant. Because your insurance will creep up with indexation, and your mortgage will hopefully be going down as you pay it off. So you need to make sure that if that's what you're protecting, you're aligning the two.
Yes. Let's say they go through a process with you, make some changes in the design of their plan, just staying with the existing provider and making some adjustments with what you have. What would be a good way to ensure that the problem of premium affordability doesn't keep on coming up every single year?
Well, there's an option where you can essentially lock in your premiums, and that's called a level premium. Now, what that means is you prepay some of it. You can actually lock your premiums in to either age 65 or age 80, depending on the product. It may be a little bit more expensive now, but it will stay the same price until age 65 or 80, which means that once you know that you can afford the cover, there's going to be no surprises next year. You're going to be paying the same amount. You can retain your cover, especially if you've gone through the process of trying to change providers and you've assessed, wow, I'm not going to be able to move anywhere else. I really need to lock this in. And then it avoids us having that conversation next year when your premium goes up again. And it avoids you, just the only mechanism you use is with reducing the amount of insurance that you have, which can be risky. Then you just lock in the good thing that you've got going on.
By the way, a really good rule of thumb is no more than about 4% of your gross taxable income to be allocated on personal insurances like this. It's not a rule, it's just a rule of thumb. So you don't have to do that, but as soon as you get over that 4%, it's just something that I've noticed over the years, that's when it really hits your consciousness that this is a big payment that we're paying for something. I hope I need it. So if you're over that 4%, it would be quite natural, I would suggest, that you would be feeling this. And it's justified to at least review it. And you should be reviewing it. What do you recommend?
I say every 2 to 3 years. Depending on your age and stage, I think every couple of years is a good idea.
Often people can really only devote the headspace to it every 2 or 3 years. There's only so much talk of cancer that people can handle for some reason.
But I find people, when they're in that peak insurance space, they want to catch up every year because it's like, I've got a lot going on. I've got and a lot's changing through that time. Like, you're doing a lot of, maybe work changes, mortgage, or homes change. You've got another kid coming every year, for example, or they're doing things like starting school. There's a lot of change through those years. And then it kind of slows off a little bit when things kind of settle down a bit.
And you're coming in for a landing. It's just me again. And then you're dead. We all go back there in the end, guys. Don't forget that part. We start off in a box and come out and back in a box.
Oh, right.
Is that right?
Okay. Oh, well,
No, that's not true. Did you come out of a box?
Well,
no.
Colloquially, yeah.
Oh, sorry. I was a bit slow with that one. Should we cut that part out? I'm not sure. Oh, dear. Anyway.
Intro.
I'm just going to wait for my temperature to lower and my face not to be so red. So to wrap up this one, though, there are a lot of things we can do, right? Like, there are a lot of things we can do to anticipate the changes well before it gets there. Like, the ultimate is to lock in your premiums so they never really go up and you don't have to worry about this. But inevitably, if you're normal, you probably will need to worry about this at some stage. And we've probably mentioned a lot of detail here, but really the only thing that you need to remember is, if you need to make some changes, reach out to the advisor who set it up. If you're thinking about changing providers and you like the cut of our jib, then let us know. And we can hook you up. We can help you out. We'll offer a free review for any new clients. And we do this for our existing clients every year, like we say. But if you're not a client of ours, then absolutely reach out. We can have a chat about how that works. Thank you very much, Carly. That was a good chat.
Yeah.
Cheers.
Is the poop deck really what I think it is? I like the cut of your jib. What's a jib?